Stock market sold off somewhat today, just 1/3%, but we did get initial claims and continuing claims. The unemployment insurance numbers came in today, this just before non-farm payrolls tomorrow morning. The story for initial claims is that unemployment is really largely not moving higher. That may mean that the Federal Reserve may need to keep interest rates higher if inflation numbers don't decline fast enough. One of the variables is, of course, employment. Tomorrow morning, non-farm payrolls hits. This could really move the market. In the meantime, the bond market took that as a sign and pushed the 10-year back above 4%. I have a full breakdown on what happened in the stock market today. So let's get in and we'll do the stock market review. Welcome to the stock market review today. I do this every day after the stock market closes and I break down basically what happened in the stock market. Today we saw an inside day, not much going on except the 10-year pushing back above 4%. At the end of the day, stock market did move downward somewhat. I think people were just bailing, getting ready for probabilities for tomorrow. I do have the put-call ratio. I do have the VIX starting to elevate a little bit, but these numbers are still relatively soft. We're not, even though we saw the past couple of days moving slightly downward, this isn't a new move where, as of right now, where the 10-year pushing up where it is necessarily going to do another October. We'll call it that. In the meantime, for the stock market review today, one of the things I'm going to be doing every day is breaking this down. These are the ETFs for each sector. And what I do is I take one share and I ask the question, getting the forward earnings per share, what's the yield you would get by owning that? These are one share for each of these sectors. I'm not really concerned too much about the overall weighting. I just want to know if I bought one share for each sector, what would the yield be? And you can see the prices have moved downward again for today. And you can see that technology, of course, still a little overvalued, whereas, say, energy and a few of the others, financials and utilities, those are some pretty high yields. However, tomorrow morning, again, we get that non-farm payroll. So let's see what happens with that. So for the stock market review today, every day I am going to put this. This is something I did this yesterday for the first time, and I got a lot of feedback. So great. Thanks. I'm really glad you guys are liking this. This is what the S&P 500 index looked like for today. You can see the kind of drop lower. Now, mind you, if you're looking at the clock down below, I'm in mountain time. And yes, I'm a veteran, so I still use military time. This is a bigger look at the S&P 500 index. A technician may have looked at that one support level, 4,700, dropped through it, not necessarily convincing just yet, but it really boils down to what's happening with the 10-year and employment tomorrow. In the meantime, the VIX, volatility index, did kind of push back upward. We'll see what happens with tomorrow's number. This was an inside day, but what happened was, and let me show you the next chart. This is the put-call ratio. Put-call ratio is starting to move back upward. You can kind of look backwards over the past year and a half or so, year that I've got listed here. The put-call ratio is exactly that, puts to calls. If it's 1, then there are equal number of puts purchased versus an equal number of calls purchased. The thing with the VIX, going back to the previous chart, if puts start increasing, that will push the VIX higher. The other variable is the sheer number. So if prices get bid up and at the same time the put-call ratio, more options are being purchased by and large, that will push the VIX higher. As of right now, put-call ratio isn't even at the 1 level. Again, everything we've seen a couple days of selling, Tuesday, Wednesday, today's being Thursday. The stock market has sold off, but the market isn't necessarily concerned. Tomorrow might be a new story. 10-year Treasury yield, as I said, pushing back above 4%. Watch this. You can see the big drop back there. That's when the Federal Reserve said, yeah, we think we're done. We can pencil in at some point we will lower interest rates. All right? When? We don't know for sure. They think maybe 3 next year. I'm not 100% on board with this. One of the things I'm watching is unemployment is not moving pretty much at all. Here's continuing claims. These numbers, so we go backwards to 2022, and of course 2022 was a very robust period for the economy, and the Federal Reserve started pushing interest rates up much higher. The stock market, of course, moved much lower all through 2022, 2023 rebounding back upwards. So are we going to see unemployment moving sort of anywhere from this point? Continuing claims to me is a much more consistent number to watch than non-farm payrolls. It's a phone survey. It always gets revised, whereas this one sort of set in stone. So how many people are claiming unemployment insurance? This gives us a good idea. Now, it isn't all the people out there on unemployment or anything like that, but it gives us a broad idea as to what the economy looks like. And we're not really seeing unemployment numbers moving higher, which could mean two things. Either the Fed nailed it, which I never believe they are capable of doing, or the Fed hasn't gotten close to what they need to be doing, and unemployment will actually start to decline again. Pricing pressures might move higher. So this is still a big story. In the meantime, US dollar index, as you can see, kind of moving sideways with the 10-year moving back upwards. The dollar index could break back above 102, maybe hitting 103, 104 again. More information for tomorrow. World U.S. oil, WTI, West Texas, seeing some moves to the downside. Just filled up at Land Rover yesterday and saw $2.99 a gallon. Now, I'm in Santa Fe, New Mexico. New Mexico, we don't have exactly the highest prices in the country. But I was a little surprised that it was pushing to $2.99, seeing how oil prices are as low as they are. This is pretty much just oil companies getting profits. Spot gold, last chart I've got for you. Spot gold kind of moving back downward. Some of the concerns about Middle East have been backing off a little bit. Nonetheless, that's your stock market review today. I do the stock market review today every day after the market closes, and I break down the economy and how that affected the stock market. Make sure to hit that like and follow button if you're just finding my channel for the first time, and also definitely make sure to tune in tomorrow, because the stock market review today is probably going to have a big amount of information. See you in the next video.